Okay, I want to share a very clean trade that I caught last week. Um, it was a sell on AUD USD as it began to pivot and transition from an uptrend to a downtrend. Um, and honestly, I've used a lot of trading mechanisms. Especially with everything being so volatile in the market, it's kind of hard to rely on fibs. It's kind of hard to rely on things that are going to predict the future. So now it's more important than ever to understand major market patterns. Okay, so we're going to go over this very quickly. I'm just going to show you how to do it with a clean chart. All right. So the first thing that I did, for those, sometimes people get nervous plotting support and resistance. So you simply just go over to indicators and strategies, and you type in pivot point standard. So you type pivot point standard. You want to click pivot point standard. I already have mine on there. Now when you come over here, you want to set on input number of pivot back. You just want to click 5. You want to go 5 pivots back. Okay. All right. So over here, first thing I want to do is I like to use the 4-hour chart as my anchor chart to kind of see. It's less noisy to kind of see which way is price going. So right here, when I use my 4-hour chart, I see it's an overall downtrend. We had some uptrending, happening right here for quite a minute. Basically from all last week, past 10, 12 days, it was moving in the uptrend direction. So we want to, if we look at this on an hour chart, it's a lot more deceptive. It's a lot more noise. 4-hour chart is a lot cleaner, a lot less noise. So the first thing I did was I drew my trend line. And since it's an uptrend, you want to go from bottom wick. I like to draw from wick to wick. Some people like to draw body to body, meaning they prefer to put it on the body right there and go up like this and cut through the wicks. I like to go wick to wick. All right. So wick to wick. Okay. So remember, two points identify a trend, 3 points confirms a trend. And here's the beauty of this. Here's why I like to go wick to wick, because I literally caught this move right here. So none of this existed yet. So what we'll do is we'll put a marker over it so that you don't really see it, because none of that existed when I made this trade. Okay, so we have this going on. All right, and when we talk about major market patterns, you want to know the story behind the currencies. It's a little more to it than shapes and lines. All right. So one major market pattern that I love is a double top. So I'm going to draw a double top for you guys right here. Double top is a bearish market pattern, which means that when a price, pretend that you're in a negotiation, right? And you're negotiating to buy a car, and the dealer keeps trying to give it to you for a certain price, and you try to talk him down. So he says 17.5, and you go, I don't want to go over 17. 17.2, 17.250 then. I don't want to go over 17. So then now you set your negotiating point at 17. So that's what happens in the market when we see a double top. Double top like this right here. Boom, boom. Price is not working over this point. And we can also use back here as a reference. So now we have our plots pointing, we have our pivot points. We go to the 1-hour chart. Go to the 1-hour chart right here and check this out. So this is where the double top, this is an example of a double top here. Let's see some more examples of a double top. Double top here and here. You see, price came up, went back down. Price came up again, went back down. Let's see, and we have our original double top point here. Here we go. Price was on a downtrend, came up, rise back up, rise, back up. Double top, formed a double top here, made his way back down. Okay, and so these gold lines are our pivot points. The R means resistance. So R1 means the strongest point of resistance. R2, second strongest point of resistance. R3, third strongest point of resistance. As the numbers get higher, the points get weaker. Okay. The P stands for pivot. That means where price is likely to pivot. So now, even looking now into the future, we see that price has pivoted. Price has currently pivoted. So now it looks like it wants to head back up, or it can continue a downtrend. We'll never know. But price has pivoted at that point, and it's already plotted for us. All right. So the beautiful thing with wedges, I caught this move right here. So I like trading. So we talked about double tops. One of my favorite shapes to trade is the wedge. The wedge, because it's extremely clean. The wedge is extremely clean. So if you know what a wedge is shaped like, it's shaped like a right triangle. Not just a regular triangle. That's so important. A right triangle with a 90-degree angle and a flat top. So right here we have, excuse me, let's see. We have a flat top right here. We have a flat top. So the key to being a wedge is the entire wedge area must be filled. That is so important. We don't want to go around trying to draw triangles, making nothing into something. Okay. So when I say the entire wedge area must be filled, this is what I mean. Pretend that you have a marker. Pretend that you have a marker, right? And you're coloring this wedge in. You see how price action is occupying this entire wedge. It's not like this area right here where some areas are, some like this area is bland or this area is blank. This area up here is blank. No, in a wedge, the entire price is covering the entire wedge area. So what we do see in the wedge is a singular point of resistance. That's our entry point. A singular point of resistance. Right here. The bulls are coming in. Boom. They hit the wall. Keep coming in. Hitting the wall. Hitting the wall. Hitting the wall. They get up here. Sellers bring them back down. They get up here again. Sellers bring them back down. Now when you start noticing this, you just simply plot your line. And as price continues to consolidate, get ready for the sellers to come in and make something happen. Okay? Because buyers, like you said, like we talked about earlier, it's like with a car negotiation. The car dealer, if they want to make the sale, they're not going to keep on trying to push once you set a price. Okay? So that's what our resistance is acting. Our resistance is, hey, we're not budging past this. Now, anything below that, let's talk about it. I'm not budging past that. Okay. All right. So here's what happened. Well, the next thing, we've identified our wedge. Our entry point is the top of the wedge right here. So we have 0.6176. I would shave maybe 2 pips off of it just to account for the spread. So I would make an entry point 0.6174. I would set a limit order, a sell limit order. All right, sell limit order. What is going to be our take profit? Our take profit, we just want to go the distance of the wedge. So let's just go to the bottom of the wedge. The wedge is approximately 65 pips. We're going to make it easy and plot a point at the bottom of the wedge, which is right here. Okay, so 0.6112 would be our take profit. That's about 60 pips. So then, if we want to always do high reward, low risk trades. Okay, high reward, low risk trades. So keep in mind, none of this has happened yet. But if I go over here, I see they already have my strongest point of resistance plotted for me. So cool, I'll make my resistance point right here. And that is 0.6238. That is approximately 60 pips from the top of the wedge, okay? 60 pips from the top of the wedge. So when I see this action in here, price continues to condense, and you get in here and it gets smaller and smaller, that's when price is getting ready to break out. That's when I'm on guard. That's when I'm ready. All right? That's when I'm ready. So I set my limit order right here, 0.61. I'll go 6174 just to account for the spread. Notice, even when the buyers try to come in right here, the buyers try to bring it up, bring it up, bring it up. They don't get up here. They don't come anywhere near our stop loss, and then our take profit. Our take profit is hit. Look at that. Our take profit is hit in less than an hour. This is one of the biggest trades, one of the lowest. This is one of the biggest trades that I've been a part in as far as risk to reward. Because I was very confident in the wedge. AUD USD is a chart. I like to call it a boulder chart. So I have three chart speeds. It's important to know chart speed as well. You have bricks. Bricks, you could throw a brick kind of quick. You could throw a brick and it's going to go kind of far and it's not going to fly really fast. Okay. Those are more of like my JPY charts. If I go EUR JPY, USD JPY, those move at the speed of a brick. They move kind of quickly, and they have some impact, but they don't go really fast. Rock charts are charts that move extremely fast. AUD, EUR AUD, for example, EUR NZD, GBP AUD, GBP NZD. Those things fly. Sometimes your spread can be 4 or 5 pips just because you might have 100, 150 pips within 2 hours. But right here, this is a boulder chart. AUD USD moves more methodical. It moves slower. It doesn't have a lot of big, huge, herky-jerky movements. So that's why we call it a boulder chart. Now, you try to throw a boulder, it's not going to go as far, but it still has a lot of impact. So I was able to put a higher lot size. Because I knew it wasn't going to travel too far. I knew it wasn't one of those things where I had to have 100 pip stop loss or anything like that. Honestly, you could have still cut. You could have cut your. Honestly, I would put my stop loss because I'm trading the wedge. Just to be super safe, you could put it up here. But I would put my stop loss slightly above this right here, because I'm just trying to drop to the bottom of this wedge. That's all I'm trying to do. That's all we're trying to do in this trade is get to 60 pips and drop to the bottom of this wedge. And I can put my stop loss, honestly, 5 pips above this. Let me see. So that is point. Yeah, you could put it 5 pips above this and you still would have been okay because we're trading the wedge. We're trading the wedge. And we're saying that price isn't going to go above. We're going to use this as a point of reference right here. So in reality, my stop loss is 30 pips. Stop loss is 30 pips. Take profit 60 plus pips. That's a 2-to-1 ratio. 2-to-1 pip to stop loss ratio. That's beautiful. That's what you want. You know, that's what you want. 2-to-1 and above. 1-to-1 is cool. 2-to-1 is great. But if you want to go 1-to-1 just to be safe, you want to go 1-to-1 just to be safe and use a lower lot size, you plot it up here at your major point of resistance, just in case it does get a quick spike. But all we're trying to do is get to the bottom of this wedge right here. And it hit. We could have plotted the point anywhere around here. And it hit in this hour. We're in, we're out. All right. So wedges. Remember, wedges, it has the characteristics to a wedge. The wedge area has to be filled. Do not try to make nothing out of something. It has to be filled. The entire area has to be filled for it to be considered a wedge. It has to be a right triangle, meaning it has to have a flat top. Meaning there has to be a price. There has to be a point where price keeps retracing, excuse me. Price keeps trying to break past, and then the sellers come in. And notice how it's getting skinnier and skinnier and skinnier. It's almost like a tough negotiation going on. The price range starts off a little wider, and then it gets narrow, 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 to the buyer's breakdown and say, okay, you got it. Boom. And notice buyers try to come back in, still couldn't get past a certain point, created a double top right here. So now if you're watching this chart, you have a chance for 2 entries. Because now look, we have double top created here, here, candle reverse pattern, but that's a whole nother thing. We have a bearish candle reverse pattern, and we ride it down. But wedge is one of my favorite things to trade. One of my favorite things to trade because it's very clear, concise. You don't need to break out the fibs. You don't need to break out a whole bunch of stuff with this volatile market. And it's important to know the story. So that's why I gave the illustration of a negotiation. It's important to know the story behind it. So what led me to this was noticing the double tops. Noticing the double top. And don't be afraid to let the chart tell you the story. So I plotted this double top over here. And this same exact line is price's action. Price action right here. Okay? Same exact line. Same thing. Look right here. Another double top. Then created a triple top. Every time price tends to hit these points, right here, goes down. Okay? So yeah, that's really it. Trading the wedge. Remember, characteristic 1, flat top. Must have a singular point of resistance. Don't try to create a wedge that doesn't exist, aka like this right here. This could not be a wedge. This could not be a wedge because 1, it has wicks. The wicks are slanting downward, not upward. Okay, so you can't come right here and try to make this a wedge. It doesn't fit. Okay. All right, you can't come, and then plus all that area is left blank. All the area is left blank. You see in here, the entire area is filled. It's consistently testing that point of resistance. Same thing here. I'm sure some people would have got faked out here trying to make this a wedge. The reason we can't make this a wedge, it's not a singular point of resistance, and look how much space is left blank. See that? It's not as, you might say, hey, well look, these two, boom, boom, support and resistance, but none of this, it's not a singular point of resistance. See that? It's not a wedge. All of that is left blank. Okay. All right. So first thing you do, use your 4-hour charger anchor chart. Pull out your pivot point standard. Pull out your pivot point standard. Input 5. You draw the direction of the trend. You see what's happening, and remember, we drew that trend line. 1, 2 points. Remember, 2 points connected. 2 points identify a trend, and then 3 points confirm it. So here's a beautiful thing right here. Literally, this trade came down and confirmed. Excuse me. This bearish move right here confirmed our trend. Boom. Tried to go back up, and then now a downtrend is just trying to begin. So we'll see. We'll see where it goes from here. But we're in and out. We got our trade in and out. Very simple. Not a trade, very good trading style that won't give you anxiety. If you do struggle and you want to know, the type of charts you should be trading, you want to go with slow chart speeds. You want to go with bolder trades. BOULDER. Go with the bolder trades. Go with the bolder trades. Go with the bolder charts. The bolder charts are AUD USD, NZD USD. Those charts move at a slower pace. You don't have to have 60, 70, 80, 90, 100 stop, 100 stop loss for your pips and prosper. All right. Everybody have a blessed day.